Gold is stalled right now, and honestly, it's catching a lot of investors off guard because, well, if you look on the surface, this should be the perfect environment for gold. You've got geopolitical tensions that are rising, oil's moving aggressively, and uncertainty is building across global markets. Normally, these are the exact scenarios where gold performs, but instead of going up, it's doing the complete opposite. Gold has just dropped to a 4-month low, and it's coming off one of the worst weekly performances in decades. So the question is, well, what are we missing here? What's actually going on? Because this isn't random. The market's telling you something, and if you don't understand it, you're going to miss out and be on the wrong side of the next move. My name is Mike. I've been investing in the risk markets now for the last 10 years. This isn't financial advice, and I am definitely not a financial advisor. I'm just here to talk markets and, well, help you understand what's really going on. So let's break this down. Let's try and answer the very obvious question right now. What's actually happening with gold? Well, the market is quietly shifting. It's telling us that, well, the old system is simply where fear drives gold higher. That's not the case. That's not the environment we're in anymore. Things have changed. This time, the move in markets wasn't about uncertainty, it was about inflation. Oil surged aggressively over the past couple of weeks, driven by rising tensions around Iran. And when oil moves like that, it doesn't just sit in isolation, it feeds directly into inflation expectations. And, well, this is where we get everything changing because, well, once inflation expectations start rising, the market immediately begins pricing in higher interest rates. And when rates go higher, well, gold starts to struggle. Not because gold's bad, but because it doesn't really pay any yields, and big money wants yields. While the retail investor is piling into leverage into oil longs because the media is telling us that oil's going higher, the Straits of Hormuz are closed, and more importantly, it's going to see risk assets dump, well, everyone's selling. Institutions are simply getting out. They're actually looking at bonds, cash, short-term instruments, and they're thinking to themselves, why gold? Why would I hold gold when I can earn something elsewhere? And that shift in thinking is exactly what's driving this move. So while most people are focused on headlines, the conflict in Iran, the uncertainty in the market is focused on something else entirely. It's focused on what central banks are doing and what they're going to do next. And right now, the message from the bond market is crystal clear. Rates are not going down quickly as people expected. We've already seen yields move sharply higher this month. Short-term treasury yields have made a massive move. In fact, one of the biggest moves since late 2024. And that tells you everything you need to know. The market is repricing inflation risks. And when that happens, assets like gold, silver, they get caught in the crossfire. This is why this move feels confusing, because on the surface, everything says gold should be going up. But underneath, well, the macro environment is saying that, well, the exact opposite is happening. And this is where parts most investors miss, because no longer is fear-driven driving the market. We're actually in a policy-driven market, and policy reacts to inflation, not fear. So if inflation is rising, essentially from something like energy, well, central banks don't have the flexibility to ease. They have to stay tight, and they have to stay tight for longer. And in that environment, that's not friendly to gold. Now, here's where this is important, because as an investor, you really need to stay plugged in, because most people are still trading old narratives. They see risk, they buy gold, and they get trapped. Even so, they'll queue outside to buy gold at an all-time high, because the real driver isn't fear, it's inflation, and more importantly, interest rates. And until that changes, gold is going to fight an uphill battle. Now, that doesn't mean gold is going to keep falling forever. And actually, the next move depends on what happens with oil and inflation. If oil stabilizes and inflation expectations start to cool and yields begin to come down, then yes, gold absolutely is going to recover, and it will recover fast. Historically, gold moves massively when markets start to ease. And if inflation stays elevated, well, central banks are forced to stay tighter for longer. And this essentially will put pressure on gold, silver, and the commodities market. And, well, that isn't over yet. And we've seen this before. Back in the early 1980s, during the inflation shock driven by energy, gold initially performed. And then, you guessed it, it collapsed hard once interest rates surged. Because at the end of the day, real rates matter more than fear. And that's the key takeaway. From everything happening right now, gold isn't broken. The market just changed. And, well, we've shifted from a world where fear drives price to a world where inflation and policy drives price. And until inflation comes down, gold essentially is going to struggle to find its footing. So the real question you should be asking right now isn't why is gold failing? It's actually this: has inflation been solved? Because if the answer is no, then this move might not be over yet. And, well, if you understand that early, that's where the real opportunity is. And remember, if you want to get an edge on the market, hit that subscribe button, and don't forget, check out some of our content on my main channel that dives deeper into the crypto market and what is going on in the macros. As always, thanks for watching. See you next time.